Dave, so today I was explaining to the team about mission statement, the vision, and what have you. And again, it occurred to me that when we use the word institutional investing, of course, we use it and we have a confidence of what it is, thinking that the crowd knows what institutional investing is. And the reality is, if people have not lived institutional investing, they don't appreciate what is special about it. And the special about it to me is the fact that there is a process and there is a discipline. So process as in institutional investing, you're just not waking up in the morning, you read something, or over dinner you hear something and then you go and act on it. You really have to have it. There is a proper process of doing the analysis, comparing it to other investments. And of course, the discipline of doing this day in, day out, having the investment committees. So when I look at how many investment committees I've attended throughout my career, man, okay, how many managers I visited, in the thousands, how many managers we ended up investing with. So that know-how to me is superior to just someone deciding for a part-time to do something, because it's not his daily job. And so to me, taking that institutional style of investing and offering it to people who would like to invest like the institutions, it's almost, like a great thing to show to people, because while they might have heard about that, but they don't have the ability to do it because of the complication. But also, if they haven't heard about it, for them to learn about how the institutions who've been doing it for a long period of time successfully do that.
Well, first of all, it's great to be here. I couldn't agree more. I mean, I think to that Malcolm Gladwell book that many people have read 5-6 years ago that highlighted achievement and expertise in sports and other things were like 10,000 reps, 10,000 free throws, 10,000 penalty kicks, 10,000 operations, something that takes not just years but decades, creates a situation where whoever's doing that sort of has an edge, is a little bit better. They've burnt their hands on things that didn't work. They've seen things work. They've seen the environment change. So I think about institutional investing as really bringing that advantage to smaller investors or other investors, the benefits of many decades, bringing the benefit of 10,000 investment committee meetings and manager visits that somebody that's spent decades in the career, bringing that to investors who can take advantage of that. It's like any other profession. You have a knee injury. Do you want to be going to the knife with a doctor who's doing it for the first time, or do you want that knee to be fixed by the guy who's done it for 25 years and, seen all kinds of things? So that's how I think about it. It obviously comes with some mostly positive connotations, but some negative ones. Is it slow? Is it more appropriate for a big institution and not really for an individual? That sort of thing. But I think the advantages vastly outweigh the disadvantages.
But so if we step back and ask the question, can an individual investor do that role himself, as in going and creating a portfolio of venture investing, which probably ends up being like thousands of companies? Can he also have the ability to figure out which investment is better than the other? Look at these investments in the context of where markets are. Are we now in a very expensive valuation, or are we at an attractive valuation? So I guess what I'm saying, that even if the investor wanted to do this, given that the amount of money he is willing to put in such a program relative to a large institution, that ability to do that is not really there.
It's very, very hard, again, like other things. But just to take your example on venture capital, first of all, who has the time, right? Like it's a more than a full-time pursuit. So one, you'd have to have the time, and secondly, you'd have to have the capital. Third, even something as simple as location, even in this day and age, using your venture example, really you'd more or less have to be in Silicon Valley and or like a New York, not even maybe in London, because so much of what happens in the industry is based in those two locales. Then you'd need, 1,000 data points or reps over multiple cycles to do it well. Well means like be drawn towards certain things that have raised the odds of a good outcome. And just as importantly, keeping you away from things that could lose you a lot of money. The combination of the two is really important. Even people who have done it for a very long time don't get it all right by any measure. But if you can kind of bend the odds in your favor modestly, and minimize mistakes and sort of maximize as best you can positive outcomes, that's the formula that has tended to do well for organizations over time. It's very, very hard for an individual to do that sort of thing. Again, just like other pursuits.